Okay guys, I'm going to read cable for you, and the reason being is I want to do it in a simplistic way. Let's roll the intro and I'll explain. And a warm welcome, one and all. Let me grab a coffee, because we all know Scruffy likes a coffee, and trust me, he does. Now, I noticed a comment. It was a nice comment, nice chat, but he was saying I overcomplicate the charts. Personally, I don't think I do. What I do is I actually read the charts. I personally think if you're looking for the system and you're going to find it down on a 5-minute chart, like a moving average cross or oscillator that's just overstretched, and away you go, you're probably just going to be spinning wheels. And let's be honest, if you are spinning wheels and that's the way you're going, you've got to ask yourself why. Well, the reason is you're not reading charts. Now, I often talk about the job, and I get other comments saying, oh, you're just a condescending git. I'm not. I'm just telling you the way it is. And if you don't like it, well, take it the way you find it. I'm not really bothered. But what I'm trying to show you is you have to look at the charts from a deeper perspective. You can't just look at a 5-minute chart and think, well, this is how the market's going to move. Because the people that run the markets is not us. It's big money. And they aren't looking at 5-minute charts. It's kind of why scalpers don't make it. And I know there's a lot of people say, yeah, scalpers are the way forward, all this sort of thing. They're not. You know, and I'm talking about people that put two or three ticks, and that's all they'll do. But they'll look to do it maybe 100 times a day. Hard work. Isn't it easy to do one trade that's half decent and then walk away? Less stress? Maybe. I don't know. What is it they say? Work smart, not hard. Who knows? Anyway, let's have a look at cable. So, I often do a little bit of a monologue like that, and I'll tell you why. There's a lot of freeloaders out there and a lot of people that are never going to make it in trading. And I start monologues like that because it shakes a lot of them out, because they just switch off, which is good, because I probably wouldn't get it anyway. But why would you consider this to be too complicated? Now, I'm not going to use my sheet. I'm not going to use the strength. I'm just going to use what's in front of me. Now, at this moment in time, we can see that the market is kind of consolidating. It's quite compressed here, but it's actually in a downward move, and you can see that here. You can physically see it, okay? Now, across as we go, you'll see you had your gap here on Sunday night. It's gone up and filled. It's gone to key levels. Those key levels are fully respected, and then it's crashed down, and all it's done is followed the levels in a downward move because it failed to go any higher. Okay, right, okay. So is there anything here that can help you as to where this chart may go? Well, there is, and it's actually this drop here. You can see it started there at the top, screamed all the way down to the bottom of this wick. Now, what has that got to do with the price of bread? It's actually helping you set the tone of the market. So if you put on a FIB, now FIBs do help, and you just drop it like this, you'll see stall points and cluster points over and over, okay? There, all right? These is how these operate. Comes in at the 23, which happens to line up perfectly with a higher time frame swing point. Straight up, stalled on that 38, straight up to the 50 and stalled. Came back to where it came from and bounced along this key level here. Now, all this is basic stuff, and it's great in retrospect. How does it help you in the future? Well, what it's doing is it's reinforcing these levels, and where you see clusters, you can sort of think, well, they're actually good areas of attraction. But what else can it do? It can actually show you roughly where a chart is going to move to. Now, if you get an expansion and put the same expansion on, what you're looking for is basically a ratio that this might actually work to. Well, if we know the key areas are the 50, which is here, you can see it's respected it. It's now holding below that 50 aggressively and gone on to make a new low. How do we know that? Because we can see it here. But what is that representing? Well, let's just put in the next 2 points. So that's the lowest point of that move. So we now got the halfway point and the lowest point that it worked to. And it did struggle there, failed, crashed through. Where would it go? Well, the 127 is the next key turning point, which is here. And then you've got another one down here, just like so. And it went to it. So even if you were just looking as a framework, because that's what this is, it's just a framework, and you wanted an idea of where the market's going, well, you can physically see that it's moving down. You don't need any indicators to tell you this. You can see it. This is an hourly chart. The tops are progressively getting lower. The low points are progressively getting lower. So therefore, there is your movement. Then you've got the old sort of saying, well, you sell high, you buy low. So what do we do now? Well, you just wait for it to get high again. Well, it is. There it is there. It's caught between these points. Where's its next logical stop? Well, it's here. You've got a free movement down into there. So from that point, you can now look to sort of go, well, okay, what if I put a moving average on? Like a standard moving average, like a 20 on a 15-minute. Why? Because it's respected quite a lot. Could that show me something? Well, let's have a little look, shall we? You know, let's just drop one on. So first of all, let's sort of take all of these off. And we'll put a basic moving average on, 20, because that's what everybody looks at. Moving average. Drop these. So that, and just have it, that, and we'll thicken that up a little bit. There we go. Right. Do we like that colour? Yeah, we'll like that colour. Or should we have it? No, we'll leave it as blue. Right. So on the hourly, we can now see it's holding under the 20. Got key areas of attraction. Take the 15-minute. It's still holding underneath that 20. Key areas of attraction. And I'm not bothered about the moving average on a 5-minute. But what I'm going to do is I'm going to count the candles on a 5-minute. But it's still holding underneath it. But 1, 2, 3, 4, 5. There's a low point just here. So what I can do now is just underneath that tail, across there, I'll put an order on there, get rid of that. Don't particularly need it too much. And what we can do is we can look to sell in and around here. Now, do what? 7 or 8, 10 pips on this. It's not too bad. Live with that. You know, just set a mandatory target of 10 pips. Put our order under there. Bush. There we go. So 10 pips down onto this bottom level. It's about right. The higher that goes up, the better. And that's it. There's a trade. There's a nice trade idea. Simplistically worked out based on what the chart is. Now, all we need to do now is look at it from a 15-minute perspective. And you can see you've got a nice solid drop here. Here. All this price is contained inside it. So not only have you got an entry point here, you could also use this to gain you some entry points, because that'll be valid as well, because you've got a definitive low and you've got a definitive high. Get your FIB and pull that in. See what it has to say for itself. Well, there's your 50. Okay, so is that 50 a good selling point? Possibly. So you could use these as well without doing the structures. You can just say, well, there's the drive, level, 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 sell, 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 and then stall at this point. Simple stuff. There's loads of things you can do, guys, to keep it simple. But for this process, we're using that 20 moving average. We're following the path of the hourly down. Worked out, there's a good point. And then every 15 minutes, we are going to just move the price up till it gets triggered in, and then just go for 10 pips. Dead simple. What I'll do is I'll just pause the camera now rather than wait. But once triggered, I'll just leave the camera running. Okay. Okay, guys, it's just triggered in. We've gotten the price higher up. Now, if you look at the tail, it's stalled bang on that fib that I put in. Now, ideally, I would have liked that a little bit higher, but I like the price to come to me. And that's what we've done. So we've got that in. Now what we can do is we can work in how far we're going to allow this to move against us. Well, it's not too difficult. You've got a swing point here, which is there. You've got a barrier here. So there's something to keep an eye on. I'll stage it up to around this point for it to come back on itself. So if it does run away with me, at least I've got an opportunity to get out. And what I'm doing now is I'm now managing my position size effectively to make me money as well. So let's play it out and we'll see how we get on. Okay guys, that's it. Job's done. Simple planning. All pretty much planned out. Knew exactly what I was up to. Let me just check my tickets and make certain I've got nothing running. There we go. Cashed out. That's what you see me do day in, day out. Day in, day out. Now in the background, the guys already knew I was doing the DAX. And then I did that just to show you that it is quite simple to do this. Now, from that, the only thing I can really say is you just apply common sense. That's it. Now, was that scalping in the form that you listen to all the time? No, because it's now 10 past 12. That trade took about 2 hours. You know, you've got your setting up of the chart, your reading of the chart, then you've got to sort of pick out where you're going to enter the market, and then you've got the trade part itself. So there's a lot of work goes involved, and we talk in sort of hours just to get 10-20 pips. You can't just rock up on a chart and think, right, I'm here, I'm ready, are you ready, why aren't you ready? Give me a trade. Just doesn't happen. You've got to put a bit of work into it, a bit of planning. And if you do that, well, then you get the fruits. And you've just seen it happen straight in front of you. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.